Taxes are financial charges imposed by governments on individuals and businesses to fund public services and government activities. The process of taxation involves several key elements, and the specifics can vary widely depending on the country and its tax system. Here's a simplified explanation of how taxes work. Taxing authority governments at various levels, local, regional, and national, have the authority to impose taxes. The taxing authority establishes tax laws and regulations that determine who is subject to taxation, what is taxable, and the rates at which taxes are assessed. Taxable entities. Taxes can be levied on individuals, businesses, and other entities. Individuals are typically subject to income taxes, while businesses may pay income taxes, corporate taxes, and other specific taxes related to their activities. Types of taxes. Income tax. Tax on the income earned by individuals and businesses. Income can include wages, salaries, profits, and other sources of earnings. Sales tax and value-added tax, VAT. Taxes on the sale of goods and services. Sales tax is usually applied at the point of sale, while VAT is a consumption tax that is applied at each stage of the production and distribution chain. Property tax. Tax on the value of real estate or personal property. Property taxes are often assessed by local governments. Corporate tax. Tax on the profits of corporations. It is separate from income taxes paid by individuals. Excise tax. Tax on specific goods such as alcohol, tobacco, gasoline, and luxury items. Payroll tax. Tax on wages and salaries, often used to fund Social Security and healthcare programs. Tax period. Tax obligations are typically assessed on an annual basis corresponding to the fiscal year. However, some taxes, like sales tax or payroll tax, may be collected more frequently. Tax filing and reporting. Individuals and businesses are required to report their income and other relevant financial information to the tax authorities. This is usually done through the submission of tax returns, which provide details on income, deductions, and credits. Deductions and credits. Taxpayers may be eligible for deductions and credits that reduce their taxable income or the amount of tax owed. Common deductions include those for mortgage interest, charitable contributions, and certain business expenses. Tax liability. The total amount of tax owed is referred to as tax liability. This is calculated based on applicable tax rates and the taxpayer's taxable income or other relevant factors. Tax collection. Tax authorities collect the revenue generated through taxes. This can be done through direct payments by individuals and businesses or through withholding mechanisms, where employers and financial institutions deduct taxes from wages and income before distributing funds. Tax enforcement. Governments enforce tax compliance through audits, penalties, and legal actions against individuals or businesses that fail to fulfill their tax obligations. It's important to note that tax systems can be complex, and the details outlined above are a broad overview. Tax laws can vary significantly between countries and regions, and individuals and businesses often seek professional advice to navigate the complexities of tax planning and compliance.